Welcome back. A new survey shows Canadian investors are willing to take on greater risk if it will help them get towards their financial goals. The poll was conducted by Angus Reid on behalf of BetaPro by Global X. It surveyed 1,000 Canadians. It showed younger people and do-it-yourselfers are more willing to take on risk than older investors and those who have an investment advisor. To talk about all of this, we're joined by McHaney, Executive VP and Head of Investment Management and Strategy at Global X. Thanks for coming in.
Happy to be here.
So talk to us about the survey's findings on Canadian investors and risks. As we know, if you want to make gains in the marketplace, and if you want to outpace inflation over a long period of time, you've got to take on some level of market risk.
Yep. And I think we're seeing maybe a bit of an evolving profile of the Canadian investor. Typically we think of Canadians as more conservative type investors, collecting those dividends over time. The boring stuff, which is all great, of course, but I think there's a growing segment of that investing population that is looking at potentially adding riskier strategies or taking on more risk in their portfolio as long as they're getting the return to go with it.
And who are they? Our introduction suggested they tend to be younger people or do-it-yourselfers.
Yeah, and the survey overall looked at over 1,000 people, as you mentioned, and just over 1 in 4 of them indicated this preference or potential to take on higher risk. When we look at younger respondents, that was up to about 41% actually. So certainly higher amount of younger investors looking at this risk addition into their portfolios, but it is somewhat across the board as well.
How many of them indicated almost no appetite for risk? I sometimes have conversations with people who are not very knowledgeable of the markets, and some of them say, "Oh no, I don't want any risk. I don't want." And I have to sort of gently explain what we've already talked about, that if you want to make meaningful gains and even stay ahead of inflation, you've got to be able to have risk, and you can calibrate your risk fairly finely these days with different types of asset allocation decisions.
Exactly, and I think most investors do understand that as well. It's really a very small subset that wants no risk and tends to be the retiree or even the older generation that, of course, can't come back from a sell-off the way a younger investor could with a longer time horizon.
Right. More Canadians are growing concerned about their ability to meet their long-term goals. Talk to us about that.
Well, I think overall part of the sentiment we got from this survey was that Canadians are having a bit more of a negative view on the Canadian economy overall, especially compared to a year ago. And really that makes sense if we think about it. That was the point of the higher interest rates that we've lived through, that the Bank of Canada raised significantly and is now in the pace of cutting those rates back down. But that's what was meant to happen, was to slow that economy down. And so we are seeing that. And now the challenge is on the Bank of Canada to get those rates back down quick enough that they don't, this slowdown doesn't permeate into something a bit longer and more permanent.
Do high housing prices fit into this picture at all? A lot of young people find it very difficult to imagine saving for a retirement portfolio and paying off that house that's priced at more than $1 million.
That's part of the results of the survey as well, is that investors are looking at potentially not being able to meet their goals, their investment goals, whether that's saving for retirement or saving for a house. As you say, housing price is obviously very, very high right now. And so I think overall, investors looking at all of this information and just feeling a little bit worse than they did, again, maybe a year or two ago.
What type of risk were survey respondents willing to take on? The most common type of risk is equity market risk, where there's the potential for higher returns, but of course stocks can go down as well as up. But there are other asset classes out there. Some of them have explosively higher levels of risk than does the stock market.
That's right, and I think the majority of respondents did view equities as that additional risk tool. I think it was about 60% of respondents looked to the equity market to add to their risk exposure, but increasingly a number looking at things like cryptocurrency as well, or option-based strategies, hedge funds, or ETFs with leverage in them, or leverage-based strategies as well.
What's the appetite for cryptocurrencies like? Seems to be very popular with young people.
We had 19% of total respondents considering adding cryptocurrency into their portfolio. And certainly I think that skews younger as well, for sure.
What were some of the other takeaways of the survey?
I think really it's about Canadians being pragmatic in looking at risk, and saying, you know what, I'm going to add risk into my portfolio if there's going to be a payoff for me. It's not just adding risk willy-nilly, trying to shoot the lights out. I think it's more about feeling a little bit worse about where they are financial position, and looking at all the tools they have in order to get back on track.
So the picture that's emerging here is a fairly rational picture that investors are thinking fairly sensibly about investing. You mentioned that the segment of the survey respondent pool who indicated no tolerance for risk or a very small tolerance for risk are people who are old, and that can be a very sensible position if you're old and not able to withstand a significant decline in equity markets.
That's right. And so again, when you're younger and have more time to retirement or a longer time horizon for those investments, a higher willingness to take on that risk. But again, being sensible about it and saying, you know what, I'm only going to do this if there's something in return for me.
Chris, thank you very much for this.
Absolutely.